Good morning all, and welcome to our joint PwC and the London Stock Exchange webinar on the Africa IPO panel. And our theme for today is Beyond the IPO and Life as a Listed Company. Today, we're going to hear great insights from, I'm going to give an opening remarks. Today, we're going to hear great insights from individuals who have been through that journey and what it means to list on an international exchange, sort of looking at life after listing. We're also hoping to be able to share with you about steps you can take to sort of prepare yourself and also sort of know the benefits and the fact that it does take a little while and the things that you can learn from the experience that our distinguished panelists have been through after listing on the exchange. More and more, over the last, sort of 20 years, we've seen that public capital funding has been a great alternative, long-term alternative to capital and funding for individuals and for companies who are looking for long-term capital, as well as access to the global market. And the idea for today is for you to get practical insights, as well as some of the steps that it will take for you to be able to list on the exchange. PwC and the London Stock Exchange has been doing quite a number of initiatives, sort of trying to promote international capital markets, especially the London Stock Exchange, to African businesses, other businesses that have presences in Africa. And we hope that today will be quite a useful step for you if you're considering it in the near future or you're in the process of doing it. So I'm going to hand over now to Denzel Jenkins, who is the interim CEO to the London Stock Exchange. And my name is Bolanle Adekoya. I head the Capital Market Accounting Advisory Group in West Africa. I'm based in Nigeria. And one of our aims as a group is to make sure that we're able to support clients, through this very important journey that they will have. So Denzel, over to you to give your opening remarks and how the London Stock Exchange can support companies who would like to list on the various exchanges. Thank you, Denzel.
Thank you, Bolanle, and delighted to be here today. As Bolanle said, my name is Denzel Jenkins, and I'm the interim chief executive of London Stock Exchange. Firstly, I want to say thank you to everyone joining us today, virtually from possibly our homes and offices from across Africa and the rest of the world. I'm especially delighted to welcome our panelists, two of whom represent companies listed on the London Stock Exchange, which I think shows this practice in action. Simon Haslam, who's the CEO of Network International, and Tom Greenwood, the Chief Operating Officer of Helios Towers. I'd also like to welcome our partners for today's event. So Miguel Azevedo from Citigroup, it's always great to have you on board. And of course, Lucy Tarleton from PwC, who's a long-standing friend of the London Stock Exchange. And many thanks to you and Bolanle and the whole team for putting this great event together. Before the panel discussion, I'd like to briefly reflect on the value of being a listed company, and particularly in the light of recent events. And I'll also just briefly talk about the role that the exchange plays as a listing venue for companies from Africa, which I'm sure will be picked up further in the panel discussion. So I think this is an unprecedented year, as we all realize, and it's been marked by the COVID pandemic, which has had a direct impact on people's lives. And I think this impact has been compounded by its impact on the economies and on companies. And I believe this crisis has shown the value for companies of being listed in the public market and being able to weather storms such as this one. And the ability of the public markets during this time to mobilize capital rapidly and at scale has been remarkable. We've seen capital being made available across asset classes, from multilateral institutions to small, early-stage businesses. In particular, we've seen major capital raisings from sectors hard hit by the pandemic, such as travel, where, for example, we've had the recent £2.5 billion rights issue for the owner of British Airways, or other sectors such as hospitality. For example, another £2 billion raised for Compass Group in a rapid placement. And importantly, we've also seen funding for healthcare companies, including those at the forefront of responding to the virus, showing the value of public markets in being able to bring societal benefit as well. So in spite of the market volatility that we have seen this year, where it's been remarkable that public markets have remained open and resilient, we've seen over $48 billion of equity, nearly $500 billion of debt raised on our markets so far. Importantly, the great majority of this equity has been follow-on raisings to help companies recapitalize or indeed pursue growth. And this ability for companies to repeatedly come back to our markets to raise capital, I think, showcases the platform for public markets and providing for efficient and ongoing access to capital. A key feature that has underpinned, I think, London's ability to do this has been the adaptability of the entire ecosystem of advisors, issuers, investors, and regulatory authorities working together. We introduced a range of temporary measures to give listed companies extra flexibility while retaining an appropriate degree of investor protection. For example, allowing them to have more time to make announcements in relation to their financial results, and also in terms of expediting capital raisings, where we've seen accelerated book builds or significant accelerated book builds being able to be done from start to finish in the course of a week. We will continue an ongoing dialogue with our issuers and investors community to understand what their needs are and what they may be in the coming months as we look forward to the recovery and helping companies be able to build back better and societies. Another area I'd like to sort of briefly comment on is innovation. The Stock Exchange, we are committed to developing and supporting innovations in capital markets. So earlier this year, we launched our Spark Live platform, which enables the exchange of content and communications via our digital platform, providing our issuers access to millions of investors. Spark provided a key communication tool for issuers and market participants during the lockdown measures, social distancing rules, and travel restrictions came into place globally. Similar to this sort of virtual conference, we need to adapt these new virtual and digital tools to access our investors and users. Another thing that I'd like to note is we've also partnered with Primary Bid, a fintech company, to provide retail investors the ability to participate in rapid capital raisings by listed companies on the same terms as major institutions. For example, at the press of a button on the digital app. We think this digitization of capital raising to make it more rapid and more efficient is a key area for development in the future. Of course, the pandemic is just one of the challenges facing our societies and companies. Another is the impact of climate change. So we continue to champion green economy issues on our market with the introduction of measures like the sustainable bond market and the green economy mark, which raises the visibility of green economy issues to investors. Now I'd like to turn to our role as a listing venue for African companies. London Stock Exchange is committed to the African continent. We have a long history of working with African companies. We currently have 121 African companies listed on our markets. We have a partnership approach with Africa, supporting investments in capital markets developments by a range of initiatives. One such initiative that we are particularly proud of is the Companies to Inspire Africa report, which aims to identify and raise the profile of high-growth companies across Africa. Second edition of this report was launched in 2019, which showcased 360 of Africa's most dynamic small SME companies across 32 countries on the continent, giving real visibility to the dynamism and growth and excellent companies that we see there. We're working together with PwC a one-year-on report was launched at the beginning of this year, which celebrated the recent achievements of a subset of these high-growth businesses that have recently raised financings, undergone M&A activity, and joint ventures. Again, I think this will be a feature of the panelist discussion that we come to in terms of those aspects. Another thing that we've done in relation to Africa, in February we launched the FTSE UK Africa Index, which includes 67 African companies on our market, allows investors to better track and identify them. We've also got key partnerships with stakeholders in the domestic markets in Africa, partnership agreements in Ghana, Nigeria, and Morocco. We built meaningful relationships with various stakeholders in other countries across the continent. We also have a long-established Africa Advisory Group, which brings together distinguished business leaders, policymakers, and investors from across Africa to discuss the challenges and opportunities presented by the developments of the continent's capital markets. We've produced 5 reports of recommendations so far in relation to how capital markets can be improved across the continent. I was also very delighted to be able to participate in a discussion in the summer this year with policymakers and members of the advisory group to discuss the impact of the pandemic across the African continent and how capital markets can help in addressing that as well. So if we return to our listed companies, obviously Helios Towers and Network International I've mentioned joined our markets in 2019 alongside another major listing from the African continent, which was Airtel Africa. And I think together they raised over $2.5 billion at IPO, which shows again, the key capital raising function of the public markets, together with the visibility and profile that attaches to being a public company. I think the panelists will shed more light on funding and M&A activities that can take place and the opportunities the public market have to support that. Just in conclusion, I'd like to say we hope to be able to work with you, many of you listening today, as you think about your companies and their development and their ability to access the public markets. I can say that London is open to the world and is where the world can get its business done. So thank you for the opportunity to talk to you today, and enjoy the rest of what I think is a great program. I can hand over to Lucy or Bolanle. Thank you.
Okay. Thank you for that, Denzel. Yes, we're now going to move into the panel session, and we're pleased to have a multidisciplinary panel with quite a number of experts who can talk about on the sponsor side, on the funding side, as well as individuals who their companies have gone through that process, as well as the London Stock Exchange sort of trying to sort of tell us about the process and the things that we consider and how we can get in there. So I'm going to hand over to Luke Collington, as said earlier on, the director in our PwC Capital Markets Group, who's going to moderate the session, and and she's also going to introduce our panelists. So over to you, Lucy, for the panel session. Thank you.
Thank you, Bolanle. Good morning, everybody. So as Bolanle says, I'm Lucy Tolton. I'm a director in our UK capital markets practice and lead the IPO proposition. Before we get into the panel itself, I would like to ask each of our panelists to briefly introduce themselves. So perhaps start with Simon.
Yeah, sure. My name is Simon Haslam. I'm the Chief Executive Officer of Network International. We're the largest provider of payment solutions across the Middle East and Africa, and we IPO'd in April 2019.
Thank you. Tom?
Hi, everyone. My name's Tom Greenwood. I'm the Chief Operating Officer of Helios Towers and was the Chief Financial Officer until a few months ago. So I was the CFO when we IPO'd last year. We're an independent telecom towers business operating across Africa in a number of markets, and are the only solely Africa-focused tower company listed in the world.
Miguel?
Yes, good afternoon or morning, depending on where our attendees are. My name is Miguel Azevedo. I head the investment banking business for Citi, both in the Middle East and Africa. And we have been very active and very much involved in many IPOs in both regions, Africa and Middle East, including the IPO of Network International.
Thanks, Miguel. And last but not least, Opie.
Yeah, good morning. My name is Okwe. I'm the Business Development Manager for Africa at London Stock Exchange. And I work with companies with operations in Africa and their major shareholders, guiding them to in raising equity capital in London.
Thank you very much, all of you. So we have about 40 minutes of a discussion, and then we have some time set aside afterwards for Q&A. No doubt the time will go very quickly. For the Q&A, you'll probably see at the bottom of your screen that there is a Q&A tab. So please feel free to type your questions using that function rather than via chat. And we will go through these at the end of the main panel discussion. As we said, as Bolanle said, the panel discussion is to discuss the process of going public on the London Stock Exchange and exploring the necessary preparation to ensure that the companies are ready for IPO, as well as the transition to and being a public company. I've got no doubt that you're going to hear some great practical insights from each of our panelists, both from a company perspective, from Tom and Simon, but also from the advisor perspective. But also hear some real life experiences associated with navigating the process and the impact of going public. So let's get started. I think I'll open with a question to Simon and Tom. Given that Network International and Helios Towers have now been public companies for over a year, what have been the main challenges or biggest differences that you found compared to when you were private businesses? Do you want to open that with Simon?
Yeah, sure. So I'll start with the differences, actually, and I think the differences are primarily positive. I would say that if you think about our profile, then being listed on the LSE has really raised the profile of the company across the Middle East and Africa. I think it's helped us attract even higher quality talent than we had before. I think it makes conversations with customers generally easier until they read your financials and see how much revenue you make, and then decide if they need a price reduction. But apart from that, it's generally positive. I think that also here in the UAE, I think there's been a particular sense of pride felt in the country that that we are one of the sort of favourite companies that was private is now listed, and again, it's helped bring visibility not just to us, but I think to the region itself.
Tom, do you have anything to add to that?
Yeah, I mean, I think I sort of echo all of that. Certainly, you're viewed as a more kind of serious company, I guess. So that very much helps with discussions with customers, particularly when these discussions involve bringing large amounts of capital to the table. For acquisitions of assets, which is a big part of what we do. So being listed. Now on the equity side, we were listed on the bond side before. Definitely helps with those conversations, and I think ultimately leads to faster business growth, which is great. I think in terms of differences, ultimately the day-to-day business is mostly the same. I think it partly depends on how the company was run and what state it was before the listing. But if you sort of prepared well and all your nuts and bolts are in place properly, like reporting and controls and things like that, which obviously they should be, then it's not really too much change. I mean, obvious changes are board changes. We were private equity funded for 9 years with a bunch of different private equity shareholders. So some of them left the board when we listed, and we got some new board members in, but still retained a few of the older ones. So there was quite good continuity there, and we brought in some good new people to our board, and that's been a very good and smooth experience. And obviously investor engagement with public investors is different to private investors. It's more regimented around quarter end reporting, with organized roadshows or calls or whatever, rather than in the private world when, tend to be speaking all the time to your private equity shareholders, which is the nature of that type of investment. But yeah, I mean, neither a massive change or certainly not an issue, just a slightly different way of doing things. But core business is the same. Arguably, we can grow faster now being listed, which is great.
So obviously you both are listed on the London Stock Exchange, and that's why we've got you on the panel this morning. OP, perhaps why, or what are the benefits of being a company listed on the London Stock Exchange, and why is London a preferred listing for African companies wanting to access the capital market?
Yeah, thanks, Lucy. So I'll just start with probably why London is a preferred exchange for African issuers. And I think it's, due to the nature of London Stock Exchange as an international exchange. So about 40% of the issuers on our market are international and represent over 100 countries. So what this does is, because of the nature of transactions that investors have worked on over the years, they've become really familiar with working on transactions, on not just UK-based transactions or even EU-based transactions, but also transactions across other continents. Now, bringing it home to Africa, we have 121 African companies listed on our markets, which makes us the international exchange with the largest number of African companies and the second largest exchange to Johannesburg Stock Exchange, which is in itself an African exchange. So I think what this has done is, it's given us a diverse base of investors that have a proper understanding of Africa. I guess to them, Africa is not a country, but they understand that, there are different countries in Africa with their unique growth stories and dynamics. So I think that has been very attractive for African companies, being able to relate with these investors that understand the markets that they operate in. And, in terms of the benefits of being in London, I think, Simon and Tom have touched on a lot of that already. It raises your profile for international investors. It gives you room to grow. It also, in terms of profile, it basically gives you that customers feel they can trust you. Your other partners also feel they can trust you, because as a listed company, they expect some level of governance and some level of transparency as well. And also, gives you room as well. And we've seen that during this crisis, gives you room to be able to raise capital in situations like this. We've had a lot of follow-on capital raised this year. That's on all our markets, both main and AIM.
I should say to all of the panelists that if there's any, when I'm asking a question, if you want to chip in and add any further comments to any of the responses that your fellow panelists are giving, then please do. So a question to Miguel. Given all your experience in advising businesses looking at the capital market, what would you say are the 4 or 5 key features that a company would need to have to be an attractive potential IPO candidate?
Thank you. That's a very interesting question. I would say maybe 5. One is you have to have a good track record, i.e., you have to have achieved something that you can show and share. It's not enough to have a great business plan, a great team, all that. You have to show track record. And this is even more so in Africa, where execution is absolutely paramount. The second topic, I would say, is you have to have growth left in your journey. You cannot wait until the moment where you have maxed out your revenues or your profits. People come into stocks, particularly in Africa, which is seen as a catch-up region where there's enormous opportunities. People come into looking for growth. The third element, I would say, geographical diversification. This may not apply in other areas. In Africa, we have found it as very important because there are certain elements outside of your control that can happen, and they happen maybe more often or with less control than in other regions. And so having a natural hedge is very important, and that translates into a premium when you list. The fourth is a strong management team, very knowledgeable of the region, of opportunities, how to explore them, of the challenges. So very experienced management team that can bring practices, but also understand the opportunities in the market. And finally, a right governance or ESG package, if you want. Investors right now have been very, very focused, and this is not like the last slide in your presentation. It used to be the last slide in your presentation, and and it used to be not even in the presentation before, but it's now a very important aspect that needs to be properly implemented and shared with investors. So I would say these are probably the 5 key features. Over to you.
Thanks, Miguel. So if you have those 5 key features and you're thinking about a potential IPO, then, and I always think that the key to a successful IPO is all in the preparation and getting ready. So to Simon and Tom, how soon did you start preparing for your IPO? And in also answering that question, what are the key areas that you sort of focused on in terms of that readiness, but also what are the other areas that companies should consider in advance to ensure that a business is ready for the public market?
Okay, so maybe I'll go first. So I would say it probably took us 12 to 15 months from when we took the initial decision that we were going to go to IPO until we actually IPO'd. I think, obviously we spent a lot of time on getting the prospectus right. It's a big document. It's a comprehensive document. I think if you leave stuff out through error, it can come back to haunt you. So you just need to make sure that everything you've possibly thought of can be in that document. I remember sitting in a room with a blank sheet of paper, and then 3 months later it was like 900 pages long, I think. So I think that's very important. I think it's important that you understand and develop the back to what Miguel was saying about what is the reason you're going to market, going to the IPO, and what is the story that you want to tell about your business to get people excited about your business so they're going to really invest in it. What makes you different from every other business that's out there? Obviously, as I think Tom said earlier, it's important to get all your documents and procedures in order and in hand. And I think even more importantly is making sure that you because your board will generally change. It'll either some of it will change, all of it will change. You'll generally have an independent chairman. You'll have a number of independent non-executive directors. I think you really have to spend time, effort, and energy on making sure that you have the right caliber board for the LSE, and preferably people who have either held executive positions in LSE companies or are existing board members in LSE companies. You shouldn't underestimate how long it takes you to find those people and get the right people and also educate them about your business.
And how did you go about finding those individuals to help you and support you?
Well, I think we were fortunate in that. So I've been in payments a long time, in other markets before I came here. Sort of like Tom, we were private equity backed, and we had a number of and the private equity funds that were backing us had used payment company or invested in payment companies before, and we just had a ready book we had a good contact book, let's put it that way. So, but we're also not only a good contact book, but also we're well known in our subject space and also to the markets in general.
Tom?
Yeah, so totally agree with everything Simon just said. Maybe I'll focus on the sort of investor engagement and marketing side, which was a big focus, and I believe that needs to be a big focus. Well, in any IPO, but for sure IPOs coming out of Africa, given the investor community around the world probably don't know Africa as much as some other locations. So we actually did one IPO process where we ended up not listing. That was in early 2018, and then we came back again in 2019 and got it done. And I'd say we had a prolonged investor engagement process, effectively actually starting in 2017 and culminating, I guess, in October 2019 when we listed. And we operate in DRC and Tanzania, Ghana, Congo, Brazzaville, South Africa, and now Senegal, and hopefully some more markets soon. But some of those markets weren't particularly well known, and some investors, had obvious concerns on some of them. Because if you go to a lot of investors around the world, and some will know Africa, but maybe they just know South Africa. Maybe they know a little bit about Nigeria as well, and that's pretty much it. And you sort of have to explain, well, actually, it's there's a lot more countries. There's 54 countries actually, and a lot of them have great features, and you can run great businesses with the right operational execution and the right sort of asset and business model in a lot of markets across Africa. So we spend a huge amount of time on a sort of education run, effectively, including roadshow after roadshow all around the world. Having investor days and bringing some of our management team from the markets to London, to New York, to meet investors face to face. So it wasn't just me and our CEO talking all the time, and really tried to let investors really feel how we run our business, and why they should be excited about it, and mitigate any kind of risk concerns that they had. And we did the analyst visits. We did that in our first attempt at IPO. We took all the bank analysts to Tanzania, And then our second one, which was a successful one, we went to DRC, which is a really great experience actually for the analysts. We had 5 banks on the deal and 10 analysts came and about 30 other bankers came. So we had about 40 bankers and analysts for 3 or 4 days in Kinshasa, which is the capital city of DRC, which is a great city, vibrant. It's enormous, 13 million people. So it's bigger than London and New York, and a lot of people haven't even heard of it. So to actually bring the analysts there, and in the knowledge that then they'll go on their road shows before the listing and tell all the investors, oh yeah, we went to Kinshasa and saw it all, and went to restaurants and a few bars and saw the business and stuff like that. It kind of helps, I think, to bring it home. So I'd really encourage other businesses thinking of IPO to try and engage as much as possible like that, and really let analysts and investors really get under the skin of the business and know what it feels. Now, obviously, in the COVID world right now, maybe that's a little bit more challenging. So you have to come up with maybe more ingenious ways of doing it, like videos and stuff like that. But I'm sure next year travel will resume somewhat anyway. So maybe that will be all right. But yeah, that was a big focus for us in our journey, the marketing, investor engagement, and really educating investors on the countries.
Yeah, sounds like it was certainly a very worthwhile investment to spend that time doing that. Miguel, I don't know if you have anything to add in terms of the marketing process and the informative nature of investor meetings.
Oh, no, really. I mean, and having Simon and Tom here, that's not a surprise. But to Tom's point, getting people to see the opportunity, the size of the opportunity. I usually say that when you get to Africa, you see GDP growing off the streets. And so you need to let people get that sense, because this is all about growth. And so that's very, very important. That would be the only comment.
So just back to a point that you made, Tom, that you and your CEO spent quite a significant amount of time with the investors and on the marketing side of the IPO. Obviously, that's not the only thing about the IPO. That's the way the IPO gets sold. But there's 2 other things. One is actually all the other requirements that go with executing the IPO, but also just running the business as usual. So, Tom, Simon, how did you manage all of that? I don't know who wants to go first.
So we'll stick to the order. So I'll go first. I would say back to, and that's where Miguel's point sort of resonated very well with me, is you need to have a very, very experienced management team that knows how to run your business. Okay, and we decided quite early on that we would have a small team that was dedicated of my executive team that was dedicated to the IPO process and getting that away and making sure it was a success and meeting the analysts, doing the road shows and so on and so forth. And the rest of my management team will be focused on running and executing on the business plan, in ensuring that we met our promises to investors. Because I've seen it many times is that companies get distracted by the whole IPO process, because it's a pretty full-on process, okay, as Tom mentioned, and you're out and about, and you've got bankers and lawyers and analysts and so on and so forth, and therefore it becomes easy to become distracted in that process from actually running your own business, okay, and the challenge there is generally you forget about running your own business till about 2 weeks after, or 2 weeks to a month after the IPO, and then the first set of results come out, and you've missed by 5% or 10% or whatever on what you said you were going to do in the IPO story, right? And that's just a disaster and not a good way to start your life as a listed company, because it becomes very challenging to recover. So you really have to make sure that you're focusing on running your business at the same time as running the IPO. And I just found that the easiest way to do it was to have those two distinct teams, which enabled us to make the process a success and deliver what we said we would deliver in our first results announcement. Tom?
Yeah, no, absolutely. I mean, definitely would echo that. You certainly don't want the whole team focusing on the IPO and not running the business. I mean, there's things you can do. You need to assess, what internal resource you have, who and how much time they can dedicate, and then you maybe need to bring in a few additional people who have done this before and can slot into the finance department and sort of be the mini IPO office, which is what we did. We had one additional legal resource as well come in, for example. And so, yeah, you just have to do that assessment from the outset and make sure you've got the right people. But there are people in the market that you can bring in for this sort of stuff who've done it before and are very good. So just recommend doing that so that the rest of the business doesn't fall down.
Absolutely, because there's not much point running the process if you haven't got a business to float at the end of it.
Yeah.
Just bringing OP into the conversation. Obviously, Simon and Tom are both listed on the main market. How would you compare, or what are the key differences between, say, the main market and AIM in terms of the process that needs to be gone through, and then also perhaps touching on the differences once being public?
Yeah, sure. So just to give a context on AIM, AIM is our high growth market, and it basically is a market that has been set up for growing companies. So the rules on AIM, have been adapted for growing companies. And typically you work with a nominated advisor who guides you first through the listing process and then stays on with you through your life as a listed company. So in terms of disclosure requirements, in terms of guiding you through things you're meant to do as a listed company, the nominated advisors stay on board and guide you through that. And I guess in terms of the process that Simon and Tom have spoken to, talking about investor engagement, having an IPO team, I think that's very relevant for listing on AIM as well. So would always advise, series of investor engagements, also getting a team who can properly manage the IPO process while collaborating with your nominated advisor. And interestingly, what we've seen this year as well is we've seen a lot of companies on AIM. So most of I'll say AIM has actually constituted about 60% of follow-on capital raised this year, which has been really good to see, because that just demonstrates that, there's investor appetite for companies listed on this market, and we continue to see this grow as fund mandates allow for more investments in high growth companies listed on AIM as well.
Just going back to the IPO, sort of getting the deal done. How soon? And this is again to Tom and Simon. How soon did you start to appoint advisors? Because obviously there's quite a number of advisors who are involved in an IPO. It's not just an investment bank.
Yeah, I would say that we appointed advisors at the time that we decided that we were going to start the journey. and so very early on in the process, and again, appointing advisors is almost a journey in itself. Okay, because in our case, I had three different shareholders, so we had each of them had their own bankers, each of them had their own lawyers. We had our own advisors, we had our own lawyers. So and obviously they can't act for both all parties. So we need to make sure that we choose the bankers carefully, and that process takes quite a lot of time. Again, we're fortunate in that because it's London, there is a large number of high quality advisors, whether those are bankers, whether those are lawyers, and the process is not cheap, but my advice is that don't skimp on the expense, because the advice and guidance and the help they give makes for a much smoother IPO process.
Tom, do you have anything to add to Simon's mentioned?
No, I mean, I think, yeah, I mean, we brought on advisors, probably 6 or 9 months before. I guess you don't need to bring them all on day one, and particularly if you're doing a extended, if you think you might want to do an extended marketing process, which might mean starting to meet investors a year, even a year and a half before an event might take place, then you can probably just do that with one bank who can help bring some investors to you, and you can sort of slowly ramp up from there. The other person probably to have a early chat with is your auditor, just to sort of say to them, hey, we might IPO in 6, 9, 12, 18 months. What do you think? And just to make sure that there aren't any red flags that they would raise. But yeah.
And I think you raised a good point there, Tom, about your auditors, because we had the same auditors pre-IPO as post-IPO, but I think the difference was that we dealt primarily with the local entity, and we ended up shifting our audit partners to the UK entity, just because they have so much experience in IPOs and more importantly reporting and auditing listed entities.
Yeah, no, exactly. And I mean, any of the accounting firms, I guess, including PwC, can do a quick IPO readiness review, which doesn't cost much and doesn't take a very long time. So that's always worthwhile, probably getting early on, and then you can it's effectively a gap analysis, and then you can just work on filling a few gaps here and there. But start that early rather than having a last minute surprise.
That's definitely something that we do quite a bit with clients that are undergoing this process, because it, as you say, it doesn't take a huge amount of time or cost to do, but actually in the long run it's very helpful, because it helps you identify where those red flags might be and sort of put in a plan to remediate them well before the IPO is at a critical point.
Yeah, I'd agree.
Yeah.
Thanks for me being able to give a bit of a plug there to but you're right, there is quite a lot of work that your audit firm or what would be badged as a reporting accountant in a London IPO would undertake. There's a lot of financial work streams, so financial work streams that go in the prospectus itself, but also behind the scenes, some of the private due diligence reports that the reporting accountant is required to do. The audit reporting accountant role is quite a key role in that. So, and as Tom and Sam have alluded to, yeah, come and speak to your auditors sooner in the process rather than later. So just going to perhaps now more onto life as a listed company. So you both alluded to some of the benefits that you found in being a public company is brought, but how much time now do you spend dealing with investors, analysts, the PLC side of things, the listed side of things, versus the day job in terms of running the business?
So I would say it's probably 50% of my time is involved in dealing with my expanded stakeholder list. So before, when we were private, owned by private equity, 4 board meetings a year, budget process, and they were really my stakeholders, and that's all who my time is spent with my board. So we've gone from 4 to 6 to 8 meetings a year. My time is with my shareholders. So again, I probably hadn't anticipated how much time I would have to spend engaging, educating, advising on my, in respect to my shareholders, because I always assumed, probably wrongly, that most people who invested in your company really knew your business inside out and backwards, and that's often not the case. So you have to spend a continual amount of time educating them and updating them, speaking to them after each financial announcement or trading updates that you give. And then we spend probably as much time with the analysts, right? We have probably 9 or 10 analysts that follow us and write about us, and again, we spend a lot of time with them. And sometimes, they just want your view on what's happening in the marketplace, what trends are you seeing. But it's certainly probably one of the most time-consuming parts of how I spend my life these days.
Tom, is that a similar experience for yourself?
Yeah, I guess when I was CFO, which was up until the end of June, yeah, for sure, a big, massive part of my role, both pre and post IPO, was, kind of all things capital markets, particularly investors, analysts, etc. And I think my role now is Chief Operating Officer. So I'm still involved in quarterly reporting and investor calls, but it's less than before. Our CFO has kind of taken the major workload on that. So I guess just because of my role change, it's a bit less now. And then our CEO, he's not on the call, so but he's probably probably 30%, I would guess. So maybe a little lower than what Simon's doing, but yeah, I mean, it's a big part of the role, for sure. Yeah.
I think what is also fascinating, Lucy, is you really have to be consistent in what you tell your investors and your analysts, because you'll often go to an analyst meeting and you'll say something and they'll pull out their notes they took of their meeting with you 2 years ago and said, well, look, I saw you on this day and you said this, and this, and now you're telling me this, and this. So you have to be really consistent and prepared, and remember that they always remember everything that you've told them in the past.
Yeah,
Yeah, that's definitely true. Well, one other thing actually that I thought of when Simon mentioned that you had 3 shareholders before, I just got reminded of it. Getting all your private shareholders aligned, ideally before you start going on the IPO journey, is best. Obviously, that might not always be possible, and you're kind of figuring things out along the way. But certainly, if you've got a group of private shareholders, and in our case, we had about 9, a mix of private equity houses and a couple of corporates. Getting everyone on the same page as much as possible is key, in terms of transaction structure, price expectations, all these things are massive moving pieces as you move through the process. And, in an ideal world, everyone will be absolutely 100% aligned from day one. But that may not be possible, and there's a bit of discovery as you go through the process. But a big part of our process certainly was speaking to all our existing investors constantly through the process to make sure everyone was kind of walking down the same path, and no one was sort of going off on a tangent. So that would be a point for everyone to think about, particularly if you've got multiple shareholders. That would be a big element of the process, actually.
Okay, and I think we're coming up to the sort of the Q&A, but I guess I've got a question. So, with the benefit of hindsight, is there anything that you would have done differently?
I don't think so, actually. I think I think it's one of these things that you learn a lot about. Well, you learn a lot about capital markets. You learn a lot about bankers. You learn a lot about dealing with obviously lawyers, and surprisingly, you also learn a lot more about your company. Right? I probably know far more about my business than I ever did before we started the process. And no, I don't think I'd do anything differently. And would I do it again? I think if you'd asked me probably a week after the IPO, I'd have probably said no, just because it's so all-consuming and it's just exhausting and tiring. But having reflected on it, yeah, I would do it again. It was and I think like anything, you learn. The whole journey was a learning process, and you learn something new every day, and you just take those learnings and apply it to the next time you do it.
Yeah, I'd echo that. Yeah.
Okay. Any further thoughts from Miguel or Opie? Have you seen individuals sort of moving to another company to
Maybe I use this opportunity to comment on one topic that I haven't really commented before, and it's particularly relevant when we come to less well-known and less well-documented or well-researched places like Africa, and it is about de-risking the process. We need to have several engagements with investors to make sure that there is a sync between what investors want and are prepared to do, and what shareholders and management teams are prepared to do. And that is very, very important to understand the concerns, to give them time to analyze the company, to come up with questions. And also very, very important, sometimes we don't talk about this, is this investor engagement process makes, selling shareholder realistic. Hearing it from the investor is always different from hearing it from the advisor, like the bankers. And An IPO only happens if both sides are happy with the pricing. And so having this mechanism and to manage everybody's expectations into a common ground area, it's very, very relevant. And this can be the difference, make the difference between actually having an IPO or doing all this painful and long process and then in the end not happening. So that's one topic I would like to highlight. If you ask me, then a few things that you would recommend for someone that is going into an IPO journey, and as Tom mentioned, it's quite a journey. To be very patient and very real. I think this came very clearly from Simon and Tom's comments. Be very well prepared, the gap analysis, do a lot of the homework before you actually get into this journey, because it's going to be very intense. Be very realistic in terms of what you expect. Don't think that, you have the best business in the world, the last Coca-Cola in the desert. That's typically not your Coca-Cola. And so be very, very realistic. That's very important. Have a very clear plan of what you're going to do with the money you raise, if you're raising money. That's also part of the ability of the story. What am I going to do? What's going to be the impact of the IPO in terms of the development of the company? And finally, both Tom and Simon mentioned this, you can promise a bit, but don't promise too much that you cannot deliver. Promise versus visions is a very line, and that's very important. But it will haunt you, and it will haunt you when you least act and when you're least prepared to respond. So be very realistic again. I think this is it.
Thank you, Miguel. There's some very wise words there. So very helpful, I think, for the audience. Got quite a few questions coming in, which is good. So I will start to have a look at these. So one which is a question that always gets asked, and it's around how much does it cost? So what type of budget percentage-wise to proceed should be set aside as costs to go public? I think this, anybody on the panel could answer this.
Yeah, I think it's hard to give a definitive answer, because again, it depends how many shareholders you've got. So that sort of determines how many advisors you have. But it's certainly, in our case, probably between 5 to 10 pounds, I think. In general, is about what it was. I seem to recall. But ours was, again, I think it depends on what kind of listing you go for. Right? I mean, we did a London premium listing, and I suspect that AIM listings or non-premium listings are probably different, because there's less sort of intensity of those.
Yeah.
Okay. Another question here around senior key positions. Did either of you, Tom or Simon, need to rethink any of the senior key positions in the company in order to be more attractive to investors and to be a public company?
No, I mean, I'm a true believer. You've got to make those decisions irrespective of going for an IPO or not. And if the management team is right and the business is doing well, then the IPO will be successful. So, if there's a person or people in the management team you're concerned about, then I would say you deal with that anyway, and then the IPO will take care of itself.
Yeah, I'd agree with Tom. I think it's, if you're running your business, you need to have the best management team, best leadership team. I think none of my team, whilst we'd worked for listed companies, both UK, US, we'd never actually run a listed company. I actually think, I go back to what I said earlier, I think actually the quality of your non-executive directors is where you really need to make key decisions and ensure that you're not having people that are there just for the sake of sitting there, but can actually, have that experience and can contribute to your life as a publicly quoted company, bringing their experiences in your industry or other industries, or even just an experience to your business.
I would add here one particular situation, which is founder-led companies. That happens often in IPOs. And it's great to have the founder because you have the vision, you have the drive, you have the history, you have the excitement. And that typically, everything else equal is a plus. But you need to show that this is not a one-man show. And you need to show that there is a bench and there is a team and depth of management, which, you may not realize how important it is if you're private because you keep going, but it is a must when you go public to have that, definitely.
Thank you. Hope that answered the question. Another question here. So around the choice of market. During the early stages of you deciding to choose the market to list on, was there any debate about whether it was London or elsewhere? Did you ever change your mind, if that was the case?
Yeah, I would say that we had a debate before we started, but once we decided, we didn't change our mind. And it sort of came out in your, I guess, in sort of Denzel's opening remarks. One of the reasons we chose London, one amongst many, is a lot of emerging market funds are based out of London. They understand the Middle East and Africa far more than other parts of the world, just for historical reasons. And I think you have to think carefully about that. Sometimes the American market is quite seen to be more of a sexy place to go sometimes, but I'm really glad we chose London. We've got good shareholders, people that understood the intricacies and nuances of the markets in which we operate.
Yeah, we had Sorry, go on, okay.
No, I was just going to say, it's nice to hear from issuers in our market, talking about London. And to add to Simon's point, one of the things we do as well in the business development team is to work with issuers to give them, a side-by-side comparison of what they get in London as well as other markets to help guide that decision early in the process.
Yeah, we did a London versus New York assessment and came to the similar conclusions for London, given the investor base knows Africa better. And that was certainly our experience through roadshows and marketing process and the eventual shareholder base as well. We did market it in New York and the US obviously as well, but we got far more from London in the end.
I would add that these are the real and the critical choices, is to find the investor base that understands your story. Sometimes people get attracted because there seems to exist an arbitrage in terms of valuation between markets that does not exist. And if it exists, it's for a very short period of time. It usually doesn't happen when you go. So don't use that as an argument, because it's a fake argument. And sometimes we see, it's tempting, it's understandable, but it's not real.
Question here, which just picking up on a couple of the points that Miguel raised in his opening comments. In your experience, which is more important on the road leading to an IPO, firm quality or market and investor sentiment?
Well, both are very important, but you only control one of them. As you focus on what you control, and then you manage the timing. Sometimes, I usually say, for example, that an IPO in Africa, and this is probably more in Africa than anywhere else, is a debate between the micro premium, and that's the quality of your business. And typically the companies that we bring to the market are excellent companies. They have been through very difficult situations and they have succeeded. So they are very good. They deserve a premium. But then you have that macro discount, and that has usually to do with countries, governance, macroeconomics, things that are outside of your control and that at the end of the day affect the market sentiment. So focus on where you can deliver premium and then try to find the time where the discount is lower.
Quite a specific question coming up. Given that both Helios and Network International are international issuers, how did you hedge your foreign currency exchange risks?
I'll let Tom answer that. I think because I have most of my, whilst we're international, most of my revenue is dollar denominated. So.
Yeah, the majority of our revenues and earnings are hard currency as well. Mostly dollars, a little bit of euro. There's some local currency in our P&L, but our contracts have escalators in as well, which largely mitigates any local currency deviation versus US dollar. So, this was a big question from investors through all the road shows, and we had a slide or two in our deck which talked through this. So yeah, a very common question to get, I'd say, on the road from investors. And the more you can say that your business is dollarized or hard currency based, the better. That's for sure. And so be prepared for that question on the road.
Another question around investor relations. To what extent did you need to create or expand an investor relations function to help deal with investors post-IPO?
So I would say we had to create one because we didn't have one before, but we didn't actually create it until after we listed. And it's a relatively small team, but it's a very specialist function. I think just after we listed, it was me and my CFO doing investor relations, but you quickly realise that becomes unsustainable, and you do need to invest in a quality IR person or team. Again, the more experienced, the better.
Yeah, we already had a bond, so we did have a somewhat of an investor relations function, part of our corporate finance team, and obviously I did a lot of it, and our CEO as well. Yeah, we didn't really change anything when we listed on the LSE. We kept it as is, and yeah, it's been fine.
I thought there'd be a question coming up around corporate social responsibility, and there is. So, which Miguel mentioned earlier, that the last page of the presentation used to be there, but it's actually being brought forward now. Perhaps, Miguel, you could say a little bit more about the extent of investor engagement with CSR, ESG, whatever we want to call it in this conversation?
Yes, sure. This can take us very far, but I think even more recently, this also became a do well kind of situation. And so, how can you do both things? And there's a sort of a bigger consciousness of making sure that we are doing the right things. But before that, it was already there in a different way. I mean, in some of these regions and in some of these markets, you have to give something if you want to get something. So making sure that you are part of the local community and you are an active player there, it's very important. I remember back in 2015, I think it was, we did an IPO for a Nigerian. It's actually the first dual listing between Lagos and London. Is an upstream oil and gas company, and there were some issues in the Niger Delta region back then, and this company was actually not having those issues. And the reason why was very simple, because they were actually very well embedded in the community and helping the community and giving back to society. And for investors, that was again, this was 5 years ago, so it was different. And investors saw that as a way of making this business model sustainable. So it was a very sort of valued approach rather than anything else. So now it becomes even more important, and you can also address different pools of investors by scoring or by ticking some of those requirements. So it is not the only aspect, but it's an important aspect. I also don't want to overplay it because you cannot do that.
Thank you. So OP, do you have anything to add?
No, I think Miguel's covered it so well. Yes, people are becoming more conscious of ESG, but these are things that have been playing out in the past. Yes, the international community appreciates it. Sorry, the international investor community appreciates it, and it's something that needs to be highlighted as well when you talk about your company.
Okay, we've got one more question, which is good for timing-wise. A good point was made not to blur the vision with the promise to investors. Can you explain? This is a difficult one to navigate for entrepreneurs. I think that was probably to Miguel.
Sorry, it's about not over-promising?
Yeah.
Yes. Well, I think the best answer to that, Simon gave it earlier on, which is, when you go and meet an investor and he goes back to his note and says, okay, hold on a second. 2 years ago, you told me that you were going to do this, and that, and you're not there. And it's incredibly important. And it will hit you faster than you think. It's just a no-go. And once you get into that sort of negative spiral, it's very, very difficult to get out of it because it's reputation above all. So definitely you don't want to go there. And it's part of the bankers to challenge management and play devil's advocate a little bit in the process. Yeah.
Yeah, I also think, Lucy, you have to, you have to continually explain your story, okay? Because they don't always remember everything that you tell them, and often, shareholders, are investing in many stocks. Analysts are covering many stocks, and you can't assume that just because you told them once, they will remember it. So you have to continually re-educate, retell, reinforce, even where to the stage where you think it's repetitive. You have to carry on doing that so that it just resonates with them.
Yes, very true.
think we're fast approaching the time to wrap up the discussion, but just a couple of final questions from me to Simon and Tom. What do you remember the most from going through the IPO? The best bits and the worst bits?
I don't think there were any worst bits. I think that's what I said earlier. It's hard work. You learn a lot. Enjoyable. Or you think once it's finished, you realise how enjoyable it was. And the best bit, I think, is standing on the floor of the LSE, pressing the button as your stock starts trading. Right? I mean, you have about a 30-second feeling in the pit of your stomach, I hope it's going to go up and not go down, right? And that's always a bit heart-stopping. But I think that was by far the highlight for me. Well, for me personally.
Tom?
Yeah, I'd echo that. Yeah, it was a fun and exciting process from start to finish. Hard work, twists and turns, stressful, but it's a life experience, and pressing that button's great. And that day's quite fun, and then the next day you realise you've got a business to run, so you just have to crack on again. But no, it's nice whilst it lasts. Yeah.
Good, thank you. And any final pieces, words of wisdom and advice from Miguel and Ope?
Okay, so I guess one of the themes that have been, that has been recurrent in these conversations with Simon and Tom is, just about the changes they had to make in terms of, board composition and everything. And I think Tom had spoken about how, it was very easy to adapt to life as a listed company because a lot of those things had already been put in place. So I think that's very important especially across Africa, in terms of just adopting a good corporate culture from the start. So yes, you might need to make a few changes, but then you're not an entirely new company post the listing process.
I would just say that it just opens a wide suite of new opportunities for the company in terms of growth, development, new markets, and it just brings you, it's just a different life. And if you have a great business, if you are an entrepreneur, a founder with a great business, and you want to take it to the next level, and you want to make it future-proof and resilient to the day you step down, I think this is a very real option. It's not the only option, let's be honest, but it's a very, very real option for a founder.
So before I hand back to Bolanle, I'd just like to thank Simon, Tom, Miguel and Ope for their valuable insights this morning and for a great discussion. I've certainly learned a few bits and pieces. So thank you all for your time, and Bolanle.
Thank you, Lucy. Thank you to the panelists. Thank you once again, Simon, Tom, Miguel, Ope. I really appreciate the practical insights that you've shared. A number of things that I just want to remind the 5 things that Miguel has said earlier on, things about having a good track record, because at the end of the day, execution is paramount. Growth, making sure you have growth next to your business. So if you're a company also thinking about listing, looking at your strong management team, best practices, and then the reminder that going listing does offer you that access and the international platform, as well as the fact that it builds trust. But for you to be able to achieve such a fate, it must mean that you have those two government structures in place. And the fact is as well that there is a lot of investor appetite with regards to Africa, and the fact that we're still there, there's a lot of untapped potential. And of course, our population helps in that sense, where you can also get good and multiple type growth. Of course, if you are thinking about it, don't forget the fact that you probably need to do like a IPO readiness, sort of looking at whether you are ready, whether you have the right things in place, you have the right structures in place, which is also of course include having a plan and being realistic on how you're going to use the proceeds of these funds, what you're going to do with them. And of course, when you're putting together your story, making sure that you're not over-promising and that you have the right team in place who can also deliver it. In a sense, you're trying to de-risk yourself so that you're priced appropriately as a company. And then the final thing I just want to say is thank you so much to our attendees and our participants. And hopefully we found it useful, and we're hoping to have further engagements with you later on. And thank you as well to Denzel Jenkins, the interim CEO of the LSEG, and just sort of, agreeing with having this joint interaction as well. So thank you, everyone. Have a great day. We will also send out, some notes from this session to all those who registered, so that we can have it for future reference. Thank you, and have a great day, everyone. Thank you once again.
Thank you.
Thank you very much. Bye-bye.
Thank you.
Thank you.
Thanks, everyone.
Bye.